I'm Bryan from the 72nd Annual National Association of Farm Broadcasting Convention in Kansas City. Thank you to Annabeth Silo of Durand Animal Wellness Center of Buffalo Valley, BASF, and Growth Energy. Joining us right now is Bryan Doherty with Stewart Peterson. We're going to talk a little bit about the markets. And Bryan, thanks for joining us. Well, let's talk about the milk. Wild ride continues in the milk prices, and a lot of that's because of that dollar.
Well, for sure. The dollar's had a really strong, since mid-October, uptrend, breaking into new highs for the year or close to it. The dollar's as high right now as it was back in January. So that's not great. But we've got some other things in the background that we're kind of resting some longer-term hope on, and that the recent announcement that China would go to two-person policy. So, that could be a big market in the future. But, we're just kind of in that hangover window right now when you get record prices. It's an economic, almost a rule that you're going to eventually sometime increase supply and decrease demand, and we're suffering the consequences of that right now. The market just perceives a lot of milk, and let's face it, we got good dairy producers.
Talking with Bryan Doherty with Stewart Peterson, let's turn our attention to the livestock sector. Cattle markets and hog markets have just been volatile, to say the least.
For sure. When you look at a lot of markets and commodities, they've been in downtrends this year, and the cattle market held up really well, but it was probably just a matter of time before the money moved out of that. And that's what you're really seeing, is you're seeing a lot of money move in and out of livestock. But the backdrop to all of that, though, is you're seeing increases in production. You're going to look this year at about a 3.5% increase in meat supplies in total, 7% of that coming from hogs alone. Excuse me. So when you have a hog market that's in a big downtrend, and hogs have been, they're cheap. They're dirt cheap right now. They're probably oversold. But that's going to tug on cattle. So cattle fall apart. Then they look like a value. The money comes back in, roars the market higher for 2 weeks, and then it comes right back out. So you're getting a lot of volatility, typically a sign that you're reaching toward a low or a top, in this case a low.
One of the big things coming up in December, going to be a big wild card. Everybody and their brothers betting that the Federal Reserve is going to raise interest rates, which if they do, strengthens the dollar, makes our exports more unaffordable. So is the market watching this?
Oh, the market's really watching it. If you look at where prices have been in the last month in commodities, they've been down. And if you look, there's something called the Goldman Sachs Commodity Composite Index. And if you look at that, it's made up of 24 commodities. It's weighted more toward energy, about a third of its energy. But it is in a big downslide. It's been in a downslide all year. We're seeing almost the exact opposite of what we saw 5 and 6 years ago, where commodities were sort of the darling of the investment community. Investors have shed commodities. They see this higher dollar. There's a worry about interest rates. There's a worry that we're not going to be exporting as much on the world market. And the dollar plays big. And I think what people fail to realize is just how big of an impact that dollar plays. The dollar was bottoming 4 and 5 years ago after a 10-year rally prior to that, so huge impact on two things: actual exports and the perception of exports. This interest rate, 0.25% hike, that's nothing. It's the tipping point of what may lie ahead.
So for producers, what do we do? Just pack it all in and go to the bunker?
Well, that's certainly one strategy. Is it a good strategy? No. Producers are resilient. We've been through this before. Older farmers have been through this a number of times before. Now it's time you hunker down, you get smart. You get the emotion out, concentrate on where your strengths are, where you can shed cost, look ahead, sharpen that marketing pencil. That's the key right there. We are in an environment where, let's face it, our farmers are very good to great, but what may separate good to great farmers is their marketing. So, look at all your opportunities. Don't look at some of these marketing tools as speculative tools. You're a business manager who's managing an inventory. You just happen to be a producer. So a lot of people, when they produce it, there's an emotion. They're married to it. They don't want to make mistakes. They don't want to get on the wrong side of things. But look and learn this winter. Take time to figure out, look, what if corn or milk or cattle go up? What am I going to do? And then if I sell it heavy, how am I going to make sure if it continues up, I haven't sold it too soon? What if we get this rally and it goes down? Do I have enough sold? Really work on your average price. Work on your marketing tools. Look for an edge. I say roll every rock over. Look for the opportunity. You look hard enough, people will survive out of this and they'll thrive out of it, and some will crumble. Don't give up is the bottom line. Be smart.
Again, Bryan Doherty with Stewart Peterson From the National Association of Farm Broadcasting Convention in Kansas City, I'm Bryan Winnikins.